Have you ever felt a surge of relief seeing a tax refund or a pang of dread when you owe money? For many, tax season brings a roller coaster of emotions, often driven by a fundamental misunderstanding of how our tax system truly operates. This emotional reaction, while common, can actually hinder your financial well-being. In this video, we're going to calmly and clearly unravel these common misconceptions. We'll explore what tax refunds genuinely represent, why owing taxes is far from a personal failure, and how neither outcome defines your financial success or personal worth. Our goal is to equip you with the knowledge to approach tax season with confidence and clarity, transforming anxiety into empowerment. For countless individuals, a tax refund feels like a personal victory, a bonus, or even proof of financial savvy. It's often perceived as a reward for doing things right, a welcome windfall that can fund a vacation or pay down debt. This perception is deeply ingrained in our collective financial psyche. Conversely, receiving a tax bill can feel like a punishment, a mistake, or something to be embarrassed about. This emotional response is powerful, leading many to believe they've somehow failed in their financial management. It creates unnecessary stress and can overshadow the true purpose of tax filing. However, the tax system doesn't operate on emotions or judgments. It's a complex but logical framework designed to collect revenue for public services. Refunds and balances due are not grades on your financial report card. They are simply the result of mathematical calculations based on your income and deductions. This emotional attachment to tax outcomes often stems from a lack of financial literacy surrounding taxation. Understanding the mechanics can help you detach from these feelings and view your tax situation objectively. It's about gaining control, not succumbing to anxiety. The core of this widespread confusion lies in how taxes are collected throughout the year. For most employees, taxes are automatically deducted from each paycheck through a process called withholding. This means a portion of your earnings is sent directly to the government before your actual annual tax liability is even known. This system is designed for convenience, ensuring a steady stream of revenue for the government and preventing taxpayers from facing one massive bill at year-end. However, it also creates the illusion that the money withheld is the government's money until you get some back. It's your money all along, just held in trust. For self-employed individuals, small business owners, and those with significant investment income, the process differs. They typically pay estimated taxes quarterly, proactively sending payments to the IRS based on their projected annual income. This requires a more hands-on approach to tax planning. At the end of the tax year, everyone reconciles. The IRS compares the total amount you've already paid through withholding or estimated payments against your actual tax liability, determined by your total income, deductions, and credits. This reconciliation is the moment of truth. Let's be clear, a tax refund is not a bonus, a reward, or free money. It's not interest earned, nor is it a special benefit you've unlocked. A tax refund simply means you overpaid your taxes throughout the year. You essentially gave the government an interest-free loan with your own money. While a refund might feel good, it indicates that more of your hard-earned money was held by the government than necessary. This money could have been in your bank account, earning interest, paying down high-interest debt, or invested for your future. It represents an opportunity cost. For young adults just starting their careers, understanding this concept is crucial for building sound financial habits. Instead of eagerly anticipating a large refund, consider adjusting your withholding to have more money in each paycheck. This allows you to manage your cash flow more effectively throughout the year. For small businesses, overpaying estimated taxes ties up capital that could be used for operations, growth, or emergency funds. A refund, in this context, highlights a potential inefficiency in cash flow management. It's a correction, not a prize. Conversely, owing taxes at the end of the year is often misunderstood as a financial misstep or a sign of poor planning. This couldn't be further from the truth. Owing taxes simply means that your withholding or estimated payments throughout the year were less than your final tax obligation. The difference needs to be settled. In many scenarios, owing taxes can actually be a sign of effective financial management or positive life changes. It might mean you adjusted your withholding to maximize your take-home pay throughout the year, allowing you to invest or save more consistently. This proactive cash flow management is a hallmark of financial literacy. For small business owners, owing taxes might reflect a successful year with higher than anticipated profits, or perhaps a strategic decision to defer income or take advantage of certain deductions. It could also stem from income sources not subject to automatic withholding, like capital gains from investments or income from a side hustle. Life events can also lead to owing taxes. A new job, a significant bonus, or even a change in marital status can alter your tax liability in ways that weren't fully accounted for by previous withholding settings. These are not failures. They are simply adjustments to your financial reality. The tax system is intentionally designed to collect revenue gradually, rather than in one lump sum. This approach benefits both the government and taxpayers. For the government, it ensures a steady, predictable flow of funds to finance public services throughout the year. For taxpayers, withholding and estimated payments prevent the shock of a massive tax bill due all at once. Imagine having to save your entire annual tax liability and pay it on April 15th. It would be a significant financial burden for most. These mechanisms spread the financial impact across the year. However, no system of estimation can be perfectly accurate for every individual's unique financial situation. Income can fluctuate, deductions can change, and life events are unpredictable. This is precisely why the annual tax filing process exists. It's the reconciliation, the final adjustment to align your payments with your true obligation. Refunds and balances due are simply the system's way of adjusting to the actual financial reality after the fact. They are not indicators of your financial worth or your intelligence. They are merely the mathematical outcome of a complex but necessary process. Understanding this helps demystify the entire experience. Adopting a healthier, more informed perspective on your tax outcomes is a cornerstone of financial literacy. A good tax result isn't necessarily a large refund. It's one where the math is accurate, you understand the reasons behind the outcome, and there are no unexpected surprises. It's about control and predictability. Ideally, your goal should be to have your withholding or estimated payments closely match your actual tax liability. This means aiming for a small refund or owing a small amount. This indicates that your money has been working for you throughout the year rather than sitting with the government. For young adults, this means learning how to adjust your W-4 form with your employer to fine-tune your withholding. For small business owners, it involves diligent record keeping and making accurate estimated tax payments. Proactive tax planning, perhaps with the help of a tax professional, can transform tax season from a source of dread into an opportunity for financial optimization. Understanding replaces shame, and knowledge empowers you to make informed financial decisions. By viewing your tax outcome as a neutral calculation rather than a personal judgment, you gain valuable insight into your financial health and can make adjustments for the future. This shift in perspective is incredibly liberating and financially beneficial. We hope this discussion has shed light on the true nature of tax refunds and balances due, empowering you with a more informed and less emotional perspective. Remember, your tax outcome is a reflection of calculations, not a judgment of your financial acumen. It's an opportunity to learn and adjust. Take action now. Review your W-4 form with your employer to ensure your withholding is appropriate, especially if you consistently receive a large refund or owe a significant amount. If you're self-employed, commit to regularly reviewing your income and expenses to make accurate estimated tax payments. Consider consulting a qualified tax professional to optimize your tax planning and ensure you're taking advantage of all eligible deductions and credits. Don't let misunderstanding dictate your financial feelings. Take control of your tax story today.